Okay, let's make a start. Welcome everyone to this evening's Audit Committee. Before we get started, Andrew, could you just introduce who we've got with us this evening, please?
Okay, Chair, if I could start with colleagues who are online. So we have Jonathan Brown, who's a partner from KPMG, our external auditors. Graham Cadle, who's a council officer, he's the Service Director for Finance. Mark Thompson, Chief Accountant and Head of Corporate Finance. And then the officers in the room, Catherine Hitman to my left, who's the Council's Head of Internal Audit and Investigations, Paul Ocean Ellis, who's the Council's Governance and Risk Manager, and Madeline Shotland from Democratic Services.
Thank you very much, Andrew. Do we have any apologies?
Councillor Akhtar.
Okay, thank you. Okay, next item is the minutes of the last meeting. Are we happy that those are a correct record? Could I see a show of hands, please? That's everyone. Yeah, thank you. The action log has been circulated. Any comments or questions on the action log? Were people happy generally with the progress? Yes, Stephen.
Thank you. I just wanted to pick up on something from the action log, but it's linked to another item under the first item we're covering, or first main item. So can I pick it up under that, if that's okay?
Okay, thank you. Any declarations of interest? No? Thank you. Any questions from the public or councillors? No. All right, thank you. So we'll move to the first main item of business, which is the statement of accounts and also KPMG's completion report. I'd like to take the completion report first, if that's okay with members. Remember, this was reviewed at the last meeting. The points raised, I believe, are substantially the same. Can I pass over to Jonathan to introduce this and where we are now with the audit, please?
Sure. Good evening, all. So, as the chair mentioned, you'll have seen a copy of this at the last meeting. You'll remember we said that at that time our audit was substantially complete. We were just crossing some T's and dotting some I's. We have done that now. We have completed our building back assurance risk assessment. So that was the work we were doing to get ourselves comfortable with the opening position before we started as auditors, those missing 2 years of audits. So we've done our risk assessment and we're completing the work. So we are still on track to complete that work by the end of February and before our backstop deadline of the 27th of February. We were hoping to come to this committee with the wording of our opinions and, you know, subject to us finishing our work, we're good to go. The NAO issued some guidance just after Christmas, late in 2025, and that meant we had to go back to the drawing board with our technical teams on the wording of our opinions. So I've had some drafts today of those opinions. So hopefully by the end of this week, we'll have all those opinions. And hopefully by the end of next week, we'll have finished that building back assurance work, which means we can issue those opinions. So very much the wording of the report that you find is very much in line with what we talked about at the last meeting. The outstanding items are done. The accounts are final as far as we see. We will update both our reports, so both the ISA 260 that you have here tonight and our annual audit report that came to the November meeting, and we'll update those for the final wording or opinion and to say that we finalised that, which again should be in the next 2 weeks and in advance of the 27th of February deadline.
Okay, thank you very much. We also obviously have the statement of accounts, which again we have seen before. Graham, I don't know if you want to say anything about that before I open it up for members.
Thank you, Chair. So as you stated, they actually haven't changed very much at all. We've detailed in the report a couple of text and minor numerical changes. But as John has just outlined, we are confident they are the final version. The final detail just is now the final approval that KPMG give us. The request, therefore, of this item is that in terms of meeting the statutory deadline, which we have to do, which is the 27th of February, we would ask the committee consider that they are happy with the detail from KPMG at this stage and with the accounts they've seen, and therefore delegate the final sign-off to the Chief Financial Officer, Graham Ebers, in consultation with the chair of this committee. So that's our request, so we can meet that key backstop date deadline. Thank you.
Thank you. Right, I'll open it up to members. Comments or questions either on the KPMG report or the accounts themselves, please. Stephen?
Thank you, Chair. Yeah, as I referred a moment ago, if I can ask colleagues to look at page 42 of our agenda pack under corporate risks. It mentions outcomes and costs for children with SEND. Due to increased demand and complexity in the number of children with SEND, the council has an overspend position of 18.2 million, which is forecast to increase. I'm not challenging that. I was just wondering where I asked the question last time, it's been picked up in the action log. It says that the delays to the 2 special needs schools amounts to about 10 million. And I wondered whether that 10 million is in the 18.2 or is it additional to? I mean, it may be that people can't answer that at the moment, in which case I'm not expecting the minutiae of detail, but I just wondered whether that was the total in terms of that, or whether there is an additional. If anyone does know, otherwise you can just provide a written answer or something if that's possible.
Okay, thank you, Stephen. Sorry, not Stephen. Graham, do you have an answer for that now? Or
I haven't off the top of my head, unless Mark's got the number floating in front of his eyes. Then if we can, he may have.
I think the 18 million that's referenced in the accounts is the annual deficit across the whole of the DSG. So any impact from those the delays of the 2 new special schools may have contributed in within that 18 million number, but that's the figure of the whole DSG. But we can take away and get some additional information as well if needed.
okay, thank you. Any other questions, comments, members? Yeah, Martijn?
I had a bit of a follow-up. I had some interaction with Graham about this already, but it might be good for others to understand as well. This was about the school and dedicated school grant reserves that showed a significant drop, and I think you got Graham put something about the causes behind the drop. But also I was wondering, is this posing a future risk for us in the future? And maybe, Graham, maybe you can explain it a little bit more to us.
Yeah, happy to, if that's okay, Chair. So I think this is the account entry is on page 132 of your agenda, which is marked 110 of the accounts. And the line that's being related to is the schools and dedicated schools grant reserve, which, and as Martin had raised at last committee, started off at 6.6 million, and I think has gone down to 1 million at the end of the year. So the detail of what this is, the headline, the title is slightly misleading. Needs updating because of the role the DSG takes on now. In essence, this is the balance we hold in respect of maintained schools, and they will call this down. So their bank accounts are part of our treasury management. They will call this down for specific projects or operational expenses if they really need to. The reason that number is reduced is because when a school goes to an academy, they will take their balance away with them. So that's why it's reduced. However, and we had this conversation, there is a growing pressure. So whilst there's not at the moment, that number's reduced because mainly there's less schools, there is a growing pressure as schools struggle to get a balanced budget, I guess, year on year. And where that becomes the case, we work with the schools. There's some central bodies that come in that help them get into that position. So we're comfortable that number's okay. It relates to the number of schools, but there is a potential future pressure should certain schools be unable to manage their annual budget. Hopefully that makes sense.
Okay, thank you. Anything else? Yep.
Graham, while we're on that page, actually, there doesn't appear to be any numbers in the middle. So you've got the balance brought forward and balance carried forward, but not. I think you should have numbers in the previous reported and then restated line.
I think you might be right. We'll check that, because as I looked through it, it didn't look right. Yeah,
No.
let us. Thank so yeah, thank you. Let us check that out and make sure that's correct in this version.
Yeah. To be honest, Graham, I didn't spot it first time either. It was only because you referred to it. Just on the audit opinion for KPMG, will we receive a draft of that as an audit committee? It can be of email. I think we previously agreed we wanted to look at that audit opinion.
I think that sounds very reasonable. I'm sure we can accommodate that, can't we? Yeah.
Yeah, absolutely.
Okay. On the KPMG report, just a few sort of minor observations. On page 178, which actually isn't their report, it's our introduction, in the top paragraph, we talk about, at the moment it's written, the completion of external audit and the fully disclaimed opinion is the key element of financial assurances we look to achieve. I think that probably should be fully unqualified opinion. That's what we're trying to achieve, not a disclaimed opinion. So that's in the top paragraph, Chair, on page 178. Final on the fourth line.
Yeah, I see what you mean. Yeah, that needs to be corrected.
In the KPMG report, nothing major, it was a good summary. I suppose a little concerned on the comment on the pensions and the actuarial evaluation. That would be on page 189. In our findings, the top point, it says, we concluded that controls in place to review the valuation did not meet the requirements of the audit standards. And then second to last line of that paragraph talks about management acknowledged they do not possess the relevant actuarial skills, etc. And I wonder what we're doing as a training thing for certainly at least one member of staff to understand defined benefit accounting, and there are courses you can go on. That's how I've learnt over the years. So I think that was one concern. Plus, I think there are references to the land and buildings valuations about reliance on experts, and maybe at the end of the day there are our set of accounts. We need to be able to build up the ability to at least review them, although I don't understand we're not actuaries or valuers. So that was one.
Could I just pause there and just get a response on those two, if that's
yeah,
all right?
please
Yeah,
do.
so Graham, I don't know if you had a response on those 2 points about the knowledge of pensions and the valuations.
Shall I go first, Graham, is it? Oh, he's on mute.
Sorry, Graham, you're on mute.
Thank you. Yeah, please, John. Yeah.
Yeah, so the auditing standard sets the bar in terms of these things. It defines as management review controls, and it basically says, as you've articulated, you know, where you've got these judgmental things like valuation of land and buildings, like valuation of pensions, you ideally would have the in-house capability to review and challenge what the valuers, what the actuaries have said, auditing standards then goes to say, well, that's the bar that you measure them against, John, and if they don't meet that bar, then you have to disclose it as a control recommendation. Taking a step back, as you quite rightly said, to actually put the control in place to meet that bar of management review control, you would have to employ your own valuers, your own actuaries, to then check the work of the actuaries and valuers that you're subcontracting the work to. So in a lot of cases, you will see this recommendation both in public sector and in corporates, because the view is the cost of putting that control and meeting that bar outweighs the actual risk avoidance that you're taking on by not having those people. So there's probably a middle ground that says, as you quite rightly articulated, you can go on various courses to get a working knowledge of the kind of challenge and appropriateness of challenge that you can provide to those valuers and experts that you use. And I think that's a really good middle ground to take on that. But I think you'll still continue to see this in future years, even if you did that, because the standards would say, well, they'd have to be qualified actuaries or qualified RICS trained surveyors.
Yeah, I broadly agree. No one wants to be an expert in these particular areas, but there are some things I think you can get training, and very simple things. You're just reviewing the discount rate. Does that make sense compared to what interest rates are doing at the moment and what other discount rates of other pension schemes might be using? Are they using the right mortality tables? They're fairly basic things, albeit I agree the detail. You have to rely on the actuaries to do the calculations. Most, and I'm sure Greg does it, most defined benefit pension schemes run by companies, the companies will have a meeting a month or two before the year end. They review the underlying assumptions with the actuaries, you agree it, you review it together, and then you proceed. And those are the sort of management controls I think you can have round it. So if we don't do that, we should do it and build up a basic knowledge, but no one's asking for us to be experts on it. On the valuation one, where we have the playing fields, moving on to that, are there any other instances, and I can't remember the valuation knowledge, I haven't got it in front of me, are there any other categories of land and buildings that we might also get caught on where we should be valuing them, not using alternative use? I think that was the issue, wasn't it, from memory? Are we happy it's just isolated this category?
Yeah, we certainly had a look across any others, and we've got that look across to what other audit teams find. So no, it was very much the playing fields that was the hot topic, and led to a lot of adjustments this year. But we're happy with the rest.
Thank you. Thank you.
May I add, Chair?
Of course, yeah.
So on the pensions, just to give a bit more assurance, because I think John went through and explained this on the last set of accounts, but obviously in terms of timing, it's taken us a while to get to the actual year. So we now have some independent experts giving us some advice, both in terms of upskilling us as a team, but also at the moment we're going through the strategy review of the pension body in terms of investments, and we're feeding into that process, including, one of the examples you gave was discount rates. So we've already taken steps in the direction, bearing in mind John's point, which is even if we get in the right place, he might tell us the same again next year, unfortunately. But things are in place. On valuations, I think it's fair to say a few years ago, one of the decisions about getting external valuers was to give auditors confidence that it wasn't us as local officers making those decisions. So it was an element of independence. I think now the position has moved on a little bit. We'll have to build the resource up to do it. We've got the expertise, it's just having the capacity, but we will, going forward, review. Probably won't be in this year's accounts, but we will review going forward whether that's better for us to do in its entirety. It's not we haven't got the skills, it's the capacity. And as I say, in the past, a bit of independence was quite helpful to give confidence to the auditors of the approach we was taking. Thank you.
That's good news, Graham. Just getting involved in some of the pension work will build up expertise in the team. The fact that you're dealing with some of these things in a project underway, so that's good news. And yes, I agree with the approach on the land. At the end of the day, there are a set of accounts, and although we rely on third parties, we need to be able to review them because mistakes are made. We know our property portfolio probably better than they do. Thank you.
Thank you. Any other comments or questions? No. Okay. Well, I just want to acknowledge that you have come a long way with the accounts on this committee over the last few years, and just to acknowledge the work that's gone in to hopefully move us to a position where we're not having a disclaimed opinion for these accounts, which is really positive overall. So just to acknowledge that. In terms of the recommendations, the completion report is to note. I want to just draw your attention to page 19 of the pack, which is the recommendations for the statement of the accounts. I will take a vote on this one. So it's to note the statement of accounts, to note the work on building back assurance, and to approve the signing of the accounts by the Deputy Chief Executive on the completion of the audit in consultation with myself as Chair. So is everyone happy with those recommendations? Can I see all those in favour, please? Elected members? Yep. Anyone against? Anyone abstaining? Okay, that's carried. Thank you. All right. Thank you very much, Jonathan, as well. Okay, so moving on then, the next item on the agenda is the risk register. So I'm going to hand over to Andrew to introduce this one.
Thank you, Chair. And may I start by just passing on Susan Parsonage apologies. You'll know that the Chief Executive has come along consistently over the last few meetings to present this item, but she's been called away at short notice. So unfortunately for the committee, you're stuck with me this evening. But I'll take you through the headlines of the report, and obviously happy to answer any questions you've got. We've got Paul in the room as the Governance and Risk Manager, who's compiled this report on behalf of the authority. So it is only a little over 2 months since the committee last looked at the corporate risk register, so there is relatively little change, although I'd hope that we'll see as we go through that we've picked up the points that you made back in November. So the recommendation that you're asked to consider this evening is to review the risk register. It's at Appendix A, which is at page 221 in the pack, and to determine whether the strategic risks are being actively managed. There are 20 live risks that we've got on the corporate risk register, and I know that's something that the committee has asked previously about, considering the number of risks that we're managing at that corporate level, or perhaps we'll come back to. So just to give you some headlines, I'd start first of all with risk one. The language in the report talks about an increase in risk one, which is the budget and financial resilience risk. Now, certainly from a technical point of view, the word increase is incorrect because you'll know from the grid, it's in that top right quadrant. It can't go any higher unless we take it off the grid in its entirety. But I would say from an officer perspective, it's perhaps more about the certainty that we've got now around that risk, because since the committee last met at the end of November, we've had some more clarity around the fairer funding settlement for the council, which gives us more certainty in terms of the next 3 years and what that might mean to the council. I did want to just pick out, again, for the committee in terms of sort of other sources of assurance, in terms of the process that the council goes through to produce a budget, which will be presented to members at full council on the 26th of this month. So the process has been going on for many months now, both at an officer level, but perhaps even more importantly, at a member level through the scrutiny committees. So from October through to last month, the Community and Corporate Overview and Scrutiny Committee met and went through in quite some detail all the proposed growth, the increases in budget and all the proposed savings, the efficiencies that are put forward. So you can, I would hope, take some assurance from that process that there's been a significant amount of scrutiny about what's being put forward. It is referenced in the report itself to the Chief Financial Officer's, Graham Eber's report that was presented to the Executive last month, which again sets out in much more detail than I'm able to do tonight, but the context and specific risks that Graham has assessed as the statutory finance officer. We are also, next week, there is an individual executive member decision, which is the council's formal response to the fairer funding settlement. We're just in a process at the moment where there were draft proposals around Christmas time. The government will finalise the position next week. So we're just going through that process as well. I guess what I'm trying to convey to the committee is that apart from what you look at around this risk, there's significant amounts of other assurance that is taking place in terms of the budget, certainly for 26, 27. Just moving on to one or two other things that I just wanted to highlight in the report. So risk 4, which is the risk around uncontrolled development, and the key sort of response to that is the council having a local plan. We reported last time that it was just going through public examination, or at least the first stage of that. That happened, that went well. There was an update to council last month through a councillor question, which for the record was item 97.3 in the council agenda of the 22nd of January, that just set out the process and where the council is at. So there's a second stage now of that local plan examination, which will take place within the next couple of months. So that process is moving forward, and that will give significant sort of mitigation around that particular risk. If I pick out risk 5, which is the costs of provision for children with SEND, and it was mentioned earlier, I think, by Councillor Newton, that the question about the 2 new SEND schools, that is on the executive's forward plan for consideration this month on the 26th of February, for the executive to decide how it's going to move forward in terms of being able to deliver against those 2 new skills. So I think, again, the committee should take some assurance from that we're getting very close now to a decision in terms of how the council will aim to get those 2 new schools built, which again should have a significant impact in terms of mitigating that risk. If I pick out risk 15, which is resources to support emerging communities, again, I just wanted to flag up that there's an individual executive member decision taking place later this month, which is the council's response to the government consultation on what's called immigration and settlement. So again, it's not just a local issue, it's a national issue, and the council, through that IEMD decision, in a few weeks' time, will be setting its position clear on that. Risk 31, which is community cohesion, and was the subject of some debate at the last committee. And I just wanted to just sort of highlight to you the work that the corporate leadership team has done around revising that description to recognise the impact of that risk of the presence of the hotel housing asylum seekers, and how this can act as a focus point for some of the issues related to community cohesion. Government policy is to close all the hotels during the term of this government. However, it's likely that there will be significant challenges to community cohesion, which will remain even when the hotel is no longer used to house people seeking asylum. So the message I wanted to convey to the committee is that the council will need to continue its work to continue mitigating this risk. And the final point I just want to flag up, and it was a request at the last committee, but you'll recall that we de-escalated risk 24, which was around waste collection. You asked for some specific information around that. That's in the pack at Appendix B. So, Chair, I'll stop there, but very happy to take any questions.
Thank you very much, Andrew. I wanted to start by picking up the comments on the finance risk, if that's okay with members, the first risk. So, and the fact that officers believe it's increased since we last met. So when we last met in November, we knew about the consultation, we knew all the detail of what was being proposed. Members were briefed on that, including things like the business rates relief. That was all in that consultation. Now we've actually had the settlement. And actually, if you look at the detail, we are getting fair funding settlement of 60 million across the 3 years, which I don't think we thought we were going to get. Correct me if I'm wrong. And I know that we have also, as a council, built up a £16 million reserve over the last few years to mitigate against fair funding shocks that we might experience. The paper links through to the CFO report, and I do notice, and I probably said this before, but I do notice that the narrative around the finances often excludes the council tax receipts, which we get here. So if you look at the core spending power in total, it is increasing over the next 3 years. I would also say, you know, you talked about that we have a 3-year settlement. We haven't had that sort of certainty for many years. And you mentioned that certainty in terms of as if it was increasing the risk or sort of cementing the risk. Arguably, that mitigates the risk because we know pretty much what we're going to get. Also, I would note that, you know, there's been announcements to do with SEND in that the government is taking back the SEND liability in a few years' time. Big, massive liability coming off council balance sheet, not referenced as far as I can see at all in the CFO report or this. So I guess the questions I've got, the likelihood for this is 6 and the impact is 8, right? And if you look at the definition of what that means, so on page 243 of the pack, it tells you what the definitions are. The definition for likelihood 6 is very high, certain, more than 95% chance. It also says an event that has a 50% chance of occurring in the next 6 months. So the risk we're looking at here is that the council is unable to finance its current services. So my questions are, surely it can't be the case that in 6 months we won't be able to finance our current services? So is it really likelihood 6 at this point? And secondly, how can it have kind of increased? How can it have increased since November, just November, when actually we've had the settlement? You know what it's going to be. It's actually better than was feared by some. So it just doesn't really stack up to me. Sorry, that's quite a bit of a ramble, but I would appreciate some comments on those points.
Let me start. I don't know whether Graham might want to jump in as well from a finance perspective, but I take your point, Chair, in terms of the scoring of this. I think we've always said there's always a degree of subjectivity in terms of where a particular risk sits. I think there's also a question perhaps for the committee to think about in terms of the difference between a risk that actually hasn't happened yet and an issue that is real and has happened. And there's, I think in this particular risk, and I think you're alluding to this, that we're not talking about the next 6 months, we're talking about the council's longer term financial sustainability, and we will have to see sort of what position council takes at the end of this month in terms of setting the budget for 26-27. But certainly from Graham Ebers' perspective and what he's conveying in his statutory officer's report, and indeed what he conveyed to the scrutiny committee last month, it would only be right and proper that Graham flagged up his concerns about the council's ongoing ability in the future to be able to continue to set balanced budgets given where that funding settlement leaves us.
Thank you. I don't know, Graham, if you wanted to add anything or not at this point.
Yeah, if I may, Chair, I think Andrew's just touched on a point of certainty. Whilst the forecast of what the position was didn't change massively, in fact, it slightly increased on kind of not quite a worst case scenario, but what we thought it would be, we still had a hope that our feedback, LGA's feedback, a number of other authorities' feedback, particularly around a floor for local authorities in our position with adult social care, would be brought into place to actually alleviate and help. And you will have seen through the consultation, different stages, some of the London boroughs actually ended up slightly better than they were. So I think in terms of it getting worse, that is, as Andrew said, about now we've got certainty, and actually none of the things that we had hoped might come in like a floor to help us through the consultation were picked up. The DSG, we do believe there's a a change coming that will help us, but we don't know what that looks like. There's different stories about percentages, not what stage. At the moment, that whole balance is ignored in essence, because of the arrangements in place. There's different stories about whether we would pick up a percentage. Obviously, that's a big number. So once that comes out, we'll be clearer. And in terms of council tax, in essence, our council tax remains, but business rates, for instance, we're now only keeping, I think it's about 5% of the monies we collect. So whichever pot's moving overall, our funds, I think, as you said, you quoted the 60 million number has reduced, and it is that element of certainty now that that's what we're facing. As Andrew, I'd take your point around maybe mapping that and making sure that fits in with exactly with the criteria for the risk element.
Okay. Sorry, I'll open up to members for questions or comments on any of this. All right, Stephen was first, I think.
Thank you. It's a good point about the square that the risk is in, and I think from what Andrew's saying, I guess that what I'm taking from this is that this is sort of like a rolling 6-month risk rather than it's July 2026 risk, because there are some uncertainties within any situation, because we know that it's likely that the council will be putting up council tax, but we don't know for definite that everybody will be able to pay it. There may be situations going on, so therefore there's unknown uncertainties around that with the cost of living situation and so on. I get the point that's been made about having certainty, but I did pick up on something that Graham just mentioned. I'd like a bit more clarity on it, please, because you were saying about business rates, the amount of business rates we reduce, we retain being reduced. Are you able to give us a quantification on that at all, Graham? Because that was sort of something I'd heard about as rumours before. But I think the problem is with this, that it's quite complex. There's lots of different pots, and they can all move. And it's where does it get to at the end? Not that, oh, this has gone up, so that's great news. But if it's being counterbalanced by something else going down, you end up back with zero almost, or whatever. So could you give us a bit more on that business rate reduction, please, Graham?
Yeah, Mark might have a more exact figure, but if I remember correctly now in detail, that and maybe we'll get something that clarifies it. We now keep about 5%. I think in the past we were keeping about 40% of business rates. Mark will correct me if that's wrong. And basically the calculation looks at your overall need, and then how that money. So the council tax comes into it, but almost because we're very strong in council tax, that reduce some of the other monies that we then get to get us back to our overall number. The forecasts that you've seen and went to ONS assume, and all the government's calculations assume, we maximise council tax increases. So, if we weren't to maximise those increases, that would make that position even worse. Mark, is that right, or is it a stronger move away for business rates?
No, that's correct. The only bit that wasn't quite right is under the previous settlement, we kept around 20% of business rates, and that's now been revised to about 5%. But within the overall settlement, there's different elements. So grants have increased in the first year, which offsets some of the business rates, but that then tails off over the 3-year period. So overall, as reported in the CFO report and will be included in the medium-term plan later this month, it sets out sort of the quantum of funding that the council have lost from business rates and government grants.
And if I could just the timing, and you'll probably see this if you look at some of the reports on other organisations that have gone bankrupt, councils, is the savings numbers that are now into the plan, bearing in mind we're already using some reserves already. If you don't hit those saving targets, they spiral the following year, because you've got to make the new ones and the ones you didn't make. So I think just from a pace wise, we've got some good reserves, but if we can't move that fast enough and that that savings reducing the cost base, bearing in mind some of the areas where demand is going up, that can move into a deficit very quickly. And that, as I say, I think if you look, I think Croydon were one of them where they had significant savings and they didn't achieve them, and it became a real spiral the following year that you're trying to make the 2 years, and then your reserves go very quickly. Not the 6 months, absolutely, but it does change very quickly.
Thank you. Go ahead, Steve.
Thank you for that. Mark, sorry, I missed one of those numbers that you said. You said that we used to have a certain percentage of business rates and it's gone, was it 10% that you said, or was it?
20.
20%, so we've lost 15%. Wow, it's almost, from a cynical perspective, you could say, is it worth having businesses? We obviously want the employment, but if we can keep us 5%, I wonder if it's worth the cost of collecting the money. But anyway, that's a different issue. But from what I'm gathering, I mean, I'm a bit simplistic maybe in some of my thinking about this, but it seems, I'm aware there being different pots of revenue that the council can get. Obviously there's council tax, there's income from fees and stuff like car parking and all the rest of it that we can charge, and I've got a bit of a view of that from one of the other committees that I'm on, and then the rest of it seems to come in various things, like you've got the business rates, which is almost hardly worth having now, it seems, and then you've got other money that comes from the government. But it seems, from what you're saying, that they're assuming we're going to put up council tax by a certain amount, so they've already baked that into our numbers. They seem to be pulling the strings on most of the other big stuff, so that, actually, the council doesn't actually set the budget anymore. It's almost like central government does by how it manipulates these other monies. Am I being too far off the truth, or is that roughly how you see it as well?
If I may, Chair, so I wouldn't quite put it in those terms. However, if you look at our income streams, as you just talked about, the grants are set, business rates is set, and then the percentage we retain is set. There is an opportunity in a short period, because they're reset every 3 years, to grow your base, which can bring additional income, but obviously in a 3-year period that's not easy, and there's a risk the other way. Then there's fees and charges, so car parking and all those sort of things where we do have an ability to raise some income, and council tax is very limited, so we can go above, as you said, they have baked in the maximum increase to the numbers. Above that, we would need to go out to a referendum to get an increase above those numbers. I believe where authorities are struggling, they are asking the government are asking that the authority go to them to ask for special measures, which can be, and I think some of the Berkshire authorities are in discussions, a bigger increase in council tax. It can be some borrowing, but obviously you have to pay the interest on the borrowing. But that's how they're looking if you can't manage the situation yourself, which doesn't feel like those authorities that have gone bankrupt at the moment, that's particularly got them out of that position very quickly. So it's difficult once you head in that direction.
Sorry, I know I'm dominating this, my apologies. Thank you for that summary. If the council did do a referendum, you've got the costs of that, and the public residents obviously may not be wanting to pay more in council tax. Also, we do see people concerned about paying extra in fees and charges when we're putting prices up above the rate of inflation. So I'm not sure would be massive support from residents for big increases above what's being imposed in either of those. So it does feel to me, rather what I set out at the start, that actually the government rather sets what our total spending is going to be, because the fees and charges as a percentage is not overly massive, and thankfully we have built up the reserves again. I think the situation a few years ago was pretty grim from what I was hearing from colleagues who were on the council at the time. So thankfully reserves may be able to help us out for the short term. But the savings thing then comes into the situation, doesn't it, in terms of the way that that's got to be managed. And I think we can take some comfort, as I think Andrew was trying to indicate earlier, from the successes that have been achieved in recent years. So I think that gives us some rays of hope that we can continue to deliver on that based upon the past delivery.
Stephen. Could I just remind you that this is about, you know, do we think the risk is being managed properly? And just, you know, is there a question there about, you know, the risk management side of it?
No, I get where you're coming from, Chair. Thank you for that. It just seems that we are managing the risk as best we can, but we're not actually in control of the risk because we can't really control the income. That's the point I'm getting to. I know it's going in a roundabout way, but I think that's the problem here, that we've got costs that are escalating, as we know, across the services, and yet actually ways of increasing our income are really not there. And that's where it all comes down to achieving the savings, is actually the only lever the council's really got, is how I'm summarising it. But thank you.
Thanks very much, Stephen. I'll take Rob, then Martine, then over there. Yeah.
Thank you, Chair. I've got two fairly simple questions, but just I don't want to carry on the numbers very much any longer. But I think we're probably likely to see a knock-on effect, because I think the point that was being raised is effectively we were planning for a bad case, and now we've got to roughly a bit better than the bad case, but a bad case. I would imagine, I expect to see the risks therefore knock through, and some of these other areas go up. Risks of our ability to deliver certain services would probably increase. So I think we might be looking at higher levels of risks flowing through onto the risk register in coming months. But that's an issue for the future, not for today. My two fairly minor points relate to Risk 22. Risk 22 has a relatively acceptable point. It's got a March target, and all the mitigating actions come to fruition in March 26 as well. Sorry, April 26, so basically 2 months from now. I just would have kind of expected the current situation and the target to be pretty close if we're expecting all the mitigating actions to have finished in about 7 or 8 weeks. I just wonder whether those mitigating actions either really will move it that far, or maybe just the target is wrong, or perhaps the current place is wrong. It just seems strange that those mitigating actions will terminate so quickly, and we're still quite a long way adrift as far as the target and that's concerned.
I think that's a fair challenge. In fact, I think similar challenges have been made in the past in terms of the gap between now and the future. Certainly happy to take that particular one away. I know Paul has been working with the risk champions across many of those other risks to bring that sort of challenge back in terms of have we got the right mitigations and are the timings lined up to where we need them to be to deliver the level of risk that we're looking for against any of these.
Okay, well, perhaps someone can have another little look at that. And I'm actually going to carry on with exactly the same issue. At the last meeting, we looked at risk 30, where there was a large, and still is a very large gap between target and current position. And on the action list, if I recall correctly, was to check and make sure that the mitigating actions really would make this jump this gap. And having looked at these mitigation actions, I'm not convinced. I think there's still some work to be done to look at this, because to me, if we've looked at those mitigating actions and we really believe that they will be sufficient to bridge that gap, I find myself struggling with that. So I think I'd like a bit more reassurance on that personally.
Okay, again, happy to take that one away.
Thanks very much, Rob. Martine was next.
Yeah, I want to go back to risk 1 as well. I know it's already in the top corner, but if I read the CFO report, it says we are losing 43 million core spending power over the next 3 years. How does that compare to sort of historical settlements we've had in the past? Is that similar, or just to put that risk a little bit in perspective?
Okay, so I don't know if Graham, you want to take that one?
I in terms of actually putting it into numbers, we need to go away and do a little bit of work, but this level of reduction is unprecedented. Wokingham has never faced anything like this. So in real terms, in 3 years' time, we will be £20 million a year worse off. And that 43 is a cumulative through the period as that's introduced. So, yeah, Graham would say the same words, and I think as said that already, this is beyond anything we've ever done. And the positive, I think that was said before, is we've been successful in delivering a number of efficiencies. The downside of that is some of those low-hanging fruits and easier ones to do are done. So it becomes much more difficult to do those. So the comment you made before about potentially where those risks then pop out in other areas is a very big one. But we can work up some actual numbers to show how different that is if that's helpful.
Can I just very briefly comment, just to be really clear on this, can I just check that I'm correct to say that if you include the council tax, you look at the core spending power in total, it is actually increasing over the next few years?
I think by a percent, the numbers are in the CFO report, aren't they? Yeah.
Thank you. Sorry, Martijn, go ahead.
Okay, but if we go back to the core spending power, the funding that we get from the government, I understand that has been reduced by 43 million, and that the impact will be higher in 3 years' time than in the next year. Is that right? I mean,
yes, that's right.
So the risk is now at a certain level, but the risk will compound even more because we're losing 43 million government funding in our third year.
Yeah, it's tiered. So by the third year, the cumulative over that 3-year period is 43.6, I think the number is. The base per year will be 20 million less.
So we might need an extra box for this risk in the next 2 years. It will be outside the matrix nearly, I think.
Hopefully not. As we've talked about, so we've got good budget monitoring in place. We're working already on mitigations and options, so it'll be very much how we can pull those together and work with political leadership to plan what those means and what that means in terms of what services we're able to deliver, how we prioritise. So the plan will be to work that through. As we have some reserves, it gives us a little bit of time, but not much. And this is, as I say, an unprecedented level of reductions we need to find. So not easy stuff.
And I've got final one. Has the central government given us any steer on how to handle these massive reduction in funding from the government?
No. I mean, in fairness, every local authority is very different, so it's very hard for them to say it. The only thing that really out there they've said is where you cannot manage those risks, plan those reductions through. They have asked you to go to them for exceptional financial support, which, as I said earlier, is things like the ability to raise council tax higher or to borrow. It's that sort of thing. So, yeah, that's kind of the options. We really need to manage it ourselves.
Thank you. Great.
Thanks, Martijn. Mike?
Not being involved in the budgeting and finance in the council, I feel myself in a very fortunate position at the moment. I think bringing this all together, the initial discussion was whether it was right to put the risk in the top right-hand side. And I think the chair has said maybe there's some mitigations, my understanding, and maybe the finance director's report is a little bit negative perhaps. But while we're still negotiating with central government, if there still is a few weeks to play there, I don't think there's any harm to have it in the top right-hand side to say this is a very high risk, potentially increase. We can always bring it down again next meeting after we've got the decision made. So I think, I'm sure they don't look at these things, but if they did and saw it, it wouldn't do us any harm at this stage. Thank you.
Thank you. Anything else? Right, Stephen and...
Sorry, Chair. I'm even more confused now because I'm hearing from Graham that we're getting cuts, and then you're saying that when we take council tax into account, it's actually not cuts. So that doesn't quite marry up in my head in terms of what's actually going on. So I just wonder if we can get a bit more clarity around that. The other thing that I'm thinking about is that core spending power is looking at per head of population. And the population in Wokingham has been growing, as we know, because we've had all of these extra houses being built and they've been occupied. So I'm thinking that even if what you're saying is correct in terms of there's a fractional increase in terms of the total spend because we've got the extra council tax, then if you divide that by a bigger number of population, isn't that less? Because all of the houses that we've now got want streetlights to be lit, they all want roads to be repaired, they all want their waste collected. So I'm just trying to get to what's the reality around, because we're hearing we're £20 million less in 3 years' time, but we've got, so I'd just like a bit of clarity around that in terms of, and maybe it's easier rather than looking at total numbers because of the variable, but to look at it in terms of per head, because actually that you can relate to. So if we had £100 per head last year, on average with everything taken into account, and we're now 101, that's more. If it's 99, it's less. It's very simple.
I mean, if you don't mind if I come in on that first, then obviously I'll go to Graham. If you look up if you look up a massive spreadsheet online that shows you all the figures for all local authorities, and it will do it per head, literally. It's a column that has it per head. If you look Wokingham, I think it will be roughly somewhere in the middle in terms of that total with the council tax. Graham can correct me if I'm wrong on that. Administrations at Wokingham, for many years, of different colours, have always focused on the funding. Said we're the lowest funding or one of the lowest funded, not the total financial picture in terms of core spending power, which includes the council tax. So that's why you're getting these different messages. One is the funding bit, one is the total resource we've got, including locally collected council tax. The other thing I'd say on the houses is that over the last few years, there's been I think it's called the Building Homes Bonus, and Wokingham has got a good chunk of money from the government for that because of all the new homes that we have built. So that has led to an increase in recent years in the funding that we've received. Anyway, I'm not the expert on this, so I probably shouldn't say any more, and I'll pass over to Graham for any more clarification.
Yeah, thank you, Chair. So I think there's some tables in the CFO report and that we've taken to ONS, and I think rather than to try and explain the link between the two, if you allow us, I'll pull something together and we'll share it with the committee that show the difference between the 42 million linked to the overall money, including council tax. I'd need to have a look, Chair, at what you're looking at to see we're in the middle, because obviously if it's every authority, there's some bigger authorities, some smaller authorities. Certainly, as I think you've said, in terms of unitary authorities, our central government grant is the lowest and now definitely the lowest. But we do have a higher percentage of council tax, which is part of why our grant has reduced, because they take all of those numbers into account and then they work out what they believe your need is. And then that kind of balances out, which is why more council taxes, more business rates is going into the central pot. So they work out your need, they work out your different income streams that you get in terms of council tax, business rates, and then they equalise it back to what they think you need. And I think, as we've explained before, that's now linked much more to deprivation, of which overall Wokingham is seen as one of the least deprived areas in the country, which is why we get one of the smallest numbers, alongside we've got a strong council tax. What we don't believe that takes into account is some local pressures we have. So things like SEND, housing costs, adult population in social care. So we believe that measurement of what our need of costs are, which links back to how much funds we get from government, we don't think fully reflects our circumstances, and that's why we're in a difficult position. So if it's okay, Chair, we'll pull something together that just explains the link between the loss of grant and the 46 million figure, and that overall increase, which is, I think, 1% per annum, if that's okay.
Yeah, that would be great. Thank you. Okay, Chrissy.
Yeah, I've just got a couple of small queries on some of the other risks. So page 233, which is risk number 13. I just noticed that one of the mitigating actions has been to withdraw from the tri-borough adult safeguarding arrangement and set up a new single borough combined safeguarding. And I just wondered if that has actually altered the risk in any way, as whether it's increased it, decreased it, or whether it's stayed the same. And whether, you know, I don't know if it was taken for economic reasons or service reasons, but that was just my query on that one.
Correct me if I'm wrong, Paul, but my understanding is that that's something that's planned, but it's not happened yet. So it's not had the impact yet. It's planned for later in 26.
But do we know if it's going to have an impact on the risk? Or
I guess the theory is that it should help to move from that current position that's in the grid to slightly lower. That's the connection that we're looking to make.
Thanks very much. Thank you. And then the other one was information governance risk, number 19 on page 236. I noticed one of the actions is an AI policy update, and I'm sure that the council will be looking at trying to do AI to help reduce staffing numbers and that kind of thing. And I just wondered if there's no actual specific mention of AI as a risk within the top paragraph, whether it should be in there, whether it should be a separate risk, but I think, you know, it is going to be a risk.
Yeah, very, very topical for us. So in terms of the AI policy, the council has one. It's disseminated internally. It's regularly updated because, as you'll be aware, it's a very sort of fast-moving area. Internally as well, we have an AI ethics board. So one of the aspects of the use of AI is making sure that there's ethical use, particularly in terms of how we might use it around making assessments, for example, and making sure that there's some human oversight as to how we do those as a council. So it's very much sort of on the radar. Perhaps what I could suggest to the committee is when I bring back the annual SARO report later this year, that we'll have a lot more coverage around AI than what we've had previously. Obviously, like I say, it's a very fast-moving area, but it's one that the council sees as part of going back to the debate about financial sustainability. It's one of the areas that is key to the council in terms of efficiency and making sure that we can deliver against those savings targets that we've got.
Thank you.
I just have one query on what Stephen raised about the increase in the council tax. So based on the fair funding formula, so I'm just saying is that if we keep increasing our council tax and keep putting pressure on our, you know, community, is that going to is that a reason that the central government is not going to give us our funding requirement, you know, fair funding, because they know that we can somehow generate that income? So I'm just saying is it's not fair for our community members to keep, you know, paying so much of, you know, council tax every year. I think we've been charging probably above inflation, and I think so. I think it's important that we put the pressure on the central government to pay our fair funding, you know, money, rather than, you know, generating that income through our, you know, residents. So I think that's quite unfair for our residents, because otherwise they will never give us a fair funding, because they know we can just somehow, you know, be able to generate that income.
So what's the question is? Could you just
so
remind us of the question?
That's a big risk in terms of, you know, in terms of. It's a risk on the fair funding formula. Basically, we will never be able to, you know, get that money from the central government. So I think this is something we need to really think about it from a long-term perspective.
Okay, thank you.
Thank you.
All right. Any other questions or comments? Right, I've got Rob and then Joseph.
Yeah, I'm just going to pick up on something that Christine said, actually, because I've made a note to ask about the issue on risk 13. It's exactly the same point that Christine raised, but I'm just going to ask for something else. Because I made a note to myself saying that the particular issues of moving out of that agreement, why does that lower the risk? We're being told effectively that will lower the risk. I don't understand why that will lower the risk, so I'd like somebody to explain to me why that's going to lower the risk, if that might be possible. I'm not necessarily expecting anybody to do it now, but I'd like to understand why you think that will lower that risk.
Yeah, I'm probably not very well qualified to answer that, so definitely get you a written answer to that. But as I understand it, albeit at a very high level, this will give Wokingham more direct control over making sure that its safeguarding practices are appropriate. But yes, I'll say no more, but we'll get an answer to it.
Okay, thank you. Joseph.
Wonderful, thank you, Chair. I just wanted to have a brief discussion about risk item 4, uncontrolled development, reduced economic development on page 227 of the pack. Not necessarily about the item itself, but more kind of around its general theme. Now, this is something I've kind of picked up through my casework in the last month or two, and when kind of reviewing this risk, it's very heavily focused on the actual planning, on the application stage. But something that I don't think necessarily this committee or this report covers in as much detail as I think it should is that kind of inter-development and that kind of those post-development concerns and consequences. I think, namely referring to failure of kind of developers or builders or anyone who has a planning application to fulfil their planning obligations. And I think with and I'm probably a little bit biased in this being from the ward that has had the most, probably one of the most largest amounts of developments in recent years, with that you have very kind of large developments and very complicated planning applications and agreements and Section 106 agreements, which can be very difficult to kind of keep track of that the obligations are being fulfilled by the developers. And through my work in the past couple of months, I found there's been this one particular developer in my ward who I've been going back and forth with the enforcement team at the council, quite consistently sending photographs on a weekly basis of various different breaches to the planning conditions. And this might just be one example, and it's why I want to get the opinion of other councillors on this as well, whether it's worth considering expanding kind of the remit and the scope of this risk to actually consider the failure to deliver on planning obligations or the potential delays to fulfil those planning obligations. I know it's something that we've suffered kind of in Barkham and Arborfield for quite a while, but I just wanted to get the opinions on everyone else or anyone else who wants to comment on that particular point.
Okay, thank you, Joseph. Does anyone else want to comment on that one? Rob?
I will agree, because I've had, probably not as bad, but similar issues with developers who haven't met their obligations. I don't exactly know how we here would do that or consider that, but I think it is a factor generally across many of the new developments.
Yeah, so in terms of the mechanism, we don't sort of own this risk register, we just sort of scrutinise it as such, but obviously we can provide that as feedback. I don't know if, Paul, that sort of issue is something that is on the risk register at kind of a lower level down, and it's just not one of the top strategic ones, which is why it's not surfacing. I don't know.
I'd have to check the Place and Growth Directorate risk register to see if it's on there, but I will do that and come back and confirm to the committee if it is on there.
And I think just as a general. Sorry, I had my microphone. Okay, any other points on the risk register, or comments or questions? No? Okay, thank you very much. Great, okay, so let's move on to internal audit next. So we've got sort of three things on internal audit, starting with the progress report. So I'll pass over to Catherine to introduce it.
Thank you, Chair. So this is the Quarter 3 Progress Update Report summarising the work of the Internal Audit and Investigation Team to the end of December, item 50 in the agenda pack. I previously reported to Audit Committee on the 26th of November, and at that meeting I was reporting to the end of September, Quarter 1 and Quarter 2, but I did give some verbal updates at that meeting about audits that have progressed further since that report was produced. And they have now been incorporated into this report, and they are summarised in the minutes of the previous meeting on page 12. So that will tell you the audits that had moved along as at the 26th of November. These are all reflected in Appendix A1, which shows all the audits in the plan for the year and the status. There's been one further audit that's progressed to draft stage as well. That was on tree management, so we're just discussing with management at the moment to bring that to final report stage. And all the other audits in the plan are either in progress or they've been allocated in the Quarter 4 period. There's been no new audits finalised during the period that's attracted the lowest categories of audit opinion, that's Category 3 and Category 4. And in terms of the high-risk concerns, there's a table on pages 258 to 259 with the current status of those high-risk concerns. And at the time of reporting, implementation dates were not yet due, but we'll keep you updated on progress as we do in the other progress reports. The report also includes the results of fraud investigation activity. And I would just say that given that it's a relatively short space of time since I last reported to you, I think those are the main points that I just wanted to highlight. And so the report's coming to Audit Committee to review and scrutinise.
Thank you very much, Catherine. Comments on the progress report or questions? It's all very clearly laid out as usual. Okay, I don't think there's... yeah, Rob?
Questions, minor things. Sorry, my apologies. A couple of things, minor things. On page 245, where we're looking at data on collected waste and recycling tonnages. Right. You look, just for a moment, you're looking like that's the wrong thing to be talking about. But I noticed there was a comment in there about dry recycling, that packaging has decreased and therefore there's less stuff being collected because there's less being produced in the first place. So where we're actually failing. I think that is part of the risk.
Yeah, it's a previous report.
Yeah, that page 245 is an appendix to the risk register.
My apologies. You were quite right. I didn't make I didn't draw the correct line under my own questions. See, I knew you were looking confused.
Thinking, where is this going?
In that case, carry on while I look at my own notes. I'll come back to you.
Okay, fair enough. Thanks, Rob. Any other questions on the progress report or comments on the progress report? No. Okay, we can always come back to that if we need to. So the next item is the draft plan. So again, sort of reminder, this is owned by Catherine as the head of internal audit, and our role again is to review it and scrutinise it, make suggestions, etc. But we can't sort of direct Catherine as such as to what audits that she plans to do. But over to you, Catherine.
Okay, thank you. So this report covers the 26-27 internal audit strategy, plan and audit charter. And this is agenda item 51. So there's two parts to the report. First of all, appendices A and A1, they set out the strategy that we've used to prepare the plan. And basically, the approach we take is that we're aiming to inform the Head of Internal Audit's annual opinion on the Council's governance, internal control and risk management framework. So in terms of the methodology we've used, that's explained in page 277. And just to summarise, when putting the strategy and plan together, there's consideration of a number of areas. Obviously, we take into account our accountancy and audit professional bodies and their advice. and also various networking groups that we're part of. You know that we use a corporate risk register to inform the audit plan where possible. And as part of this strategy, we aim to cover all the key corporate risks over a 3-year cycle. And as we're aware now, there's a number of new key corporate risks this year, so we've incorporated those into the 3-year cycle as well. I also attend all DMTs and discuss with those DMTs and the specific directors areas where there are corporate priorities and specific risks that they would like us to look into, and also to see where audit can assist and add value. And as well as focusing on key corporate risks and key operational risks, there are other elements in the audit plan as well. So we undertake work on governance building blocks, so that's looking at areas such as risk management and specific audits on governance and information governance. We also have a block in the plan for grant certification work and also fraud investigations. And we have another element called auditor judgment. So it might be something that hasn't come up through a corporate risk register or a key operational risk register, but we feel it still needs some audit input. And then the final area is for advice and contingency work that comes up during the course of the year. Where possible, we take account of other assurance mechanisms across the council. So you remember at the last meeting, we discussed about the CQC report in adults. So we had placed reliance on that work. There was also a highways external review in the last year. So in the coming year, we'll be looking at that and looking at the findings there. And also if there's any Ofsted inspections, just to give you an indication of where we place other reliance on other mechanisms. And obviously I've got to balance all this with the resources available to the team. So I've put all this together into Appendix A1, which is on pages 285 to 288. And this sets out the proposed plan for 26-27. And within that plan, there are some scoping descriptions, but they're very high level at the moment. And obviously, once we come to undertake the audit, we'll flesh that out in a little bit more detail with the relevant officers to prepare the scopes. So I'll pause there. There is a second part to this report, but I'm happy to take any questions.
Thank you, Catherine. Yeah, Rob?
Well, I'm happy to leave that. I'm happy to leave that, but we said we could go back once I've figured myself out on the progress report, but I'm happy to ask my questions after this section, if that's preferred.
Yes, Christine, and then Mike.
Thanks very much, Catherine. I noticed that you've got funding agreed to have a senior audit person join you. So has this plan been drawn up in mind with them included or not included from the sort of resource point of view?
There's an assumption they will be included from the 1st of April, and I have made an offer to that post to the candidate, so I'm waiting for them to come back to me this week. So.
Okay, great. Thank you.
Thank you.
Thank you, Catherine. If I could refer everybody to page 280 of the pack. So that lists the corporate risks and then which year will cover those risks. And I looked at the very high risk ones in the corporate risk register thinking, well, maybe we ought to be visiting some of those more often because we've identified them as very risk. And there's a couple that stand out. One was risk 5, so outcomes and costs for children with SEND. We didn't do an audit, I don't think, in this area this year. The last time we did one was 24-25, and we're saying we're not going to look at that until 27-28. So I wonder whether that 2 or 3 year gap is a bit too long. Further down is risk 8, which again is a very high risk, being cyber security. Now I think from memory we did one this year, didn't we, on that? But I do wonder whether leaving that to 28, 29, particularly the way cyber is moving on and the risk and AI we've already talked about, whether that's really too long to leave it before we look at it again. And 2 of the high risk ones, I think from memory, was adult safeguarding in children's safeguarding, which are 13 and 14. And they're not very high risk, but I know it's quite a key thing we have to look after as a council. And again, we're not looking at that till 3 years' time. The other side, going the other way, I noticed we've got risk 25 on procurement, and that's now been taken off our corporate risk register, I think. So maybe that's an audit we could save. So perhaps look at that as well. I think that was it, although I think risk 30 on placement and things like that is a very high risk, and we're not looking at that next year, but at least we are looking at it the year after. Yeah. So I wonder whether perhaps, Catherine, you should perhaps pick up some of those, but I'll be interested. Your views, Chair.
I'll just come back on some of
those.
Do
you want to come back first?
So on the SEND audit, it was an audit for 24-25, but it's actually completed in 25-26. So if you look on the progress report on page 266 at the bottom, it shows that was completed quite late. I think it was about that SEND one, which is risk 5. So I think that was completed in October 25. So it did span the 2 years. So there would have been coverage in both the years. Transactions would have been taken from each year. The cyber one, we are actually going to be doing some work on cyber in terms of under information governance and use of IT from members as well. So we do have a slightly separate audit on that one. Also in relation to cyber, we're doing work which again will span into next year in terms of emergency planning. And so we're on one of the working groups for that and advising into that as that progresses. So that comes as a slightly separate audit rather under advice and consultancy work, basically. Risks 13 and 14, I note that, and I'll just go back and just check my planning notes on that one as to where they're not in. Procurement, as you say, if that's coming off the risk register now, I can have a thought about that. And then that just leaves the risk 30, is it, that you mentioned as well? Yeah, okay.
Yeah, and I think, I don't know if it's possible when, I mean, it's great to have it presented so clearly in this way and we can, you know, see it mapped. I just wonder it'd be even better if it was colour-coded so that we can see at a glance the corporate risk and whether it's, you know, red, was it red, amber or yellow in the risk register? I know that's sort of extra, but that just, you know, that would enhance it even more and then we even more be able to see it at a glance. And pick out some of the things.
And I think if we are covering cyber in different areas, maybe we do a footnote because it looks us a bit vulnerable, to be honest, only looking at it once every 3 years. In reality, you might be looking at it in other areas, so perhaps a bit of guidance.
So maybe if there's other assurance from different sources, it could be starred or something like that, just so that, again, we can see at a glance the picture.
Covering ourselves as an audit committee.
I mean, on page 287 of the audit plan, there's the IT cyber governance in there with a broad scope.
So maybe cross-reference it, Catherine, to there.
And I think we also had conversations at previous audit committee when Graham Ebers was here that some of these risks we could audit all the time, but we've got our fingers tied if we're relying on the government to have some intervention. But I do remember we said we'd put a note in there, didn't we, to say we'd consider it. But it wouldn't be appropriate necessarily to audit that, like SEND every year.
Yes, and we are aware you have limited resource as well, so we are mindful of that. So it's just a matter of documenting that we've considered these things.
Thanks very much, Mike. Martin.
I had just one clarification. Some of the audits or the risks, for example, I don't know, 21, we do them this year and we do them next year. Is that because they either overlap or looking at different parts of the?
Some of the audits just span over into the next financial year. So, so for example, the SEND one was a 24-25 audit, but because of various reasons, we did testing as well in 25-26, so it spanned the two.
Okay, thank you. Any other comments on the plan? No? Okay, we'll move on to the charter then, please.
Okay, so you'll be familiar with the Internal Audit Charter. So this is appendices A2 and A3 in the report, and each year we present this alongside the internal audit plan. The Charter is the terms of reference for internal audit, and we've updated it to reflect the new global internal audit standards. So there are two versions. There's a clean version at Appendix A2 and a track changes version at Appendix A3, and it's coming to you this evening for you to approve.
Okay, the changes are not huge since that's mainly to do with the audit standards, right? So any comments or questions on the Charter? Were you all happy with the Charter? Okay, thank you very much, Catherine. In terms of the recommendations on this one, if we could direct you to page 269, because as Catherine says, we do need to formally approve the Charter. So the recommendations are to review and scrutinise the plan and to approve the internal audit Charter. So could I see a show of hands, all those in favour of those recommendations, please? Anyone against? Anyone abstaining? Chetna, are you abstaining? You're voting for? Yeah. Okay, thank you, that's carried. Thank you very much. Okay, thanks very much, Catherine, as always. Oh, sorry, I'm so sorry, Rob. Do come back to the progress report before we move on. Yeah, go ahead.
Thanks very much. I wasn't sure I was going to tag it right on the end of it. Sorry, so if I might just go back to a couple of questions I had and think, I'm sure these are personal understanding more than anything else. I'm specifically interested in some of the follow-up to the high-risk concerns. So you've got, and they're pages 255, 256, 257, so the areas where you're identifying a number of high-risk concerns over the various years and identifying what's happened and those which have been completed, those which have been superseded by the next audit and so forth. And I've got a couple of questions which might be just my understanding, so I'll ask them all together if I may. One is to find out what is exactly meant by superseded by the next audit, because if that simply means that we failed to do it and the next audit's caught up with it, then that's kind of a failure. And I'm not sure whether that's what it actually means or not, so I'd like to know if that's the case. You also said that when you're looking at follow-up activity, you say there were no overdue high-risk concerns, which is good, but were there any whose target date was extended so they no longer became ones which were missed, but we simply moved the date out, in which case really that's missed. We're just kind of juggling the dates to make it seem like we're okay. And the final point, which is again related to exactly the same issue, is when you have a table talking about the high-risk concerns and management countermeasures, there were 36 original ones, 21 of which have been closed, which is pretty good. But that means there are 14 or 15 that are still still extant. But there's only 11 identified in the table. So I just wondered whether I'm completely misunderstanding it or whether there are 3 somewhere knocking around. That, if you're not quite sure, that was the one on page 258. And it didn't make sense to me, which could be my misunderstanding or it might be a problem.
Thanks, Rob.
Okay, so in terms of those that have been superseded, I will need to go back just to the tracker to find out exactly the reasons why. It could be that the next audit's come along, or there could be other reason for that, so I can provide an explanation. I'd like to look at the actual detail because it doesn't actually stipulate that in the table here, does it? It's just a summary, so I'll come back with the specific detail on that one. The second point you mentioned about dates being moved, there has to be a good reason to be able to move those dates. We don't just juggle around with dates. We go back to the offices and we need, explanations as to why that might be. So there could be perfectly good reason why the target date originally wasn't met. I think sometimes there's, officers are a bit over-ambitious in terms of the dates that they set when they agree them. And so we're trying to work through that now just to make sure that they are a bit more realistic going forward.
Can I just comment on that one? I think I can completely understand. I don't imagine you just making the dates up for the heck of it. But equally, if we're setting a target date and then moving it for good reason, I think we need to flag up to ourselves that that is actually overdue, if you like, and we've accepted that there are good reasons why it's overdue, and therefore we're moving the date. But if we simply move the date and don't effectively flag up that I'm trying not to use the word failed because I'm not suggesting it's a failure, but I think it's and I'm also trying not to use the word hiding, I don't think it's being completely clear that we have not met our original plan. Changing the plan without highlighting it, I think, is confusing to me, let's put it that way.
Okay. I think what's perhaps missing... Oh, sorry.
Very briefly, Colin, Catherine, just to say, because Catherine and I meet outside this meeting as well, and one of the things Catherine does is send me the full tracker with all of the recommendations in, and she will testify that I ask exactly the same kind of questions and look at, well, when was the original target date? Why has it actually been moved so far? So I think these are fair questions, but I've always been satisfied that, you know, that Catherine is, and the team are sort of rigorous in terms of not just accepting, you know, sort of excuses, as it were, but there are genuine reasons. And if there weren't, that would just become an overdue action, right? You know, it's overdue and it would show up. But I think they're certainly valid questions, and I ask the same things. Sorry, Catherine, interrupted.
I was just going to say, perhaps what's just missing then is the original target date, the reason, having a column as to why it's been extended, and then the new target date, and that will give members that reassurance that there was a good reason behind that extension.
I don't want to create a whole pile of extra work if it's something that's already being done in a different way. It was a question that, to me, it wasn't clear, but if it's being done in a different way, then I'm happy to take Rachel's assurance, the Chair's assurance that it is happening.
I think you're right that we should always be looking at those numbers and sort of scrutinising them exactly that way, so that's a good challenge. Okay.
And sorry, could you remind me?
Then one question was on page 258, your table. You talk about 36 high-risk concerns, 21 of which are being closed, which leaves 14 to 15, but there's only 11 shown in the table below, if I've understood it correctly.
But I'll go back and double check that one. Okay. It might just be a typo, but I'll confirm to you as well.
Sorry, I missed my place.
I don't know if it's because the superseded ones are not in there. But anyway, I'm sure Catherine will confirm.
It will be.
I think that might be it. Yeah. Okay.
No, the numbers still don't match.
They still don't. Okay. All right. Well, anyway, Catherine will confirm.
I'll clarify.
All right. Okay. So I think now we are done with internal audit. Thank you very much,
Thank you,
Catherine. So the next item is the Audit Committee self-effectiveness review. So that's Paul.
Hi, so this is page 303 of your agenda pack, and for many of you, you'll be familiar with this. This is the annual review of the Audit Committee and its effectiveness. We benchmark against the SIPFA position statement on audit committees and use their self-assessment diagnostic tool. We've gone through and completed that, and it shows a very positive position against those standards. We've improved slightly from last year. We've identified 3 areas where we've got minor improvements to make. They're listed on page 304. Essentially, that's obtaining feedback from stakeholders on the committee's performance, continue to expand the range of leaders and managers engaged with during the year. I think the risk spotlight will be an opportunity to do that, and to involve yourselves as audit committee members a little bit more in the self-assessment process. So those are the three very minor areas, but the overall position is that the committee is highly effective, and that's reflected in the self-assessment and where we are.
Thank you very much. I'd also add, I mean, you can see looking through it, it does look very positive against these standards. So I think part of what we need to do is just check that we're genuinely content that that is a true reflection, because it does look very positive. I think as well as that, it's great if that's the case, and we agree that that's the case, but I think we should also just have a moment of reflection as to other ways that we think we could be more effective that's not necessarily captured in the SIPFA model. So that's what I think we should try and get out of this. So firstly then, in terms of the assessment that we've got, does anyone have comments or questions or challenges or anything? Rob?
I noticed when we're talking about in the section on updates from actions from last year, it references again the risk spotlight, which we've talked about at a number of different audit committee meetings, but not actually done one that I'm aware of. And I'm just worried whether whether I've missed something or we've missed something.
I thought we did do one. No?
So, no, I think we've talked about it several times, but not actually done one. So I just think if we're saying that that's what we're doing and we're great, then we're not quite telling ourselves the truth.
We will be doing a risk spotlight at the next committee meeting, but it's not part of the assessment. Sorry, that's an opportunity for other officers to come and present and help expand the committee's range of officers that are attending the committee and presenting to you, to give you wider perspectives on the authority. I wasn't suggesting that we'd already had a spotlight. Sorry, that's part of the opportunity to address one of the minor areas that we need to we have the opportunity to improve in.
Is that okay with you, Rob?
Yeah, can I just follow on? And I'm not sure if you're saying that at the next meeting you're going to have officers come along to talk about what might be spotlights, or whether that's actually going to be the output of a spotlight.
No, sorry, I'll try and explain it a little bit more clearly. One of the areas that, of the three areas that the assessment has identified is the opportunity to engage with a broader range of officers, because the attendance from officers is largely the same. The risk spotlight is how we plan to address that action going forward.
I think what I was thinking of was the partnerships focus that we had last time. We focused on that on how we're managing the risk of that.
Yes,
so that's why I was thinking we have done one, we haven't. So I think we need to make sure we're not saying we've done something we haven't, which I don't think we are, because it's not part of the. But we're saying that that's the plan going forward in terms of the improvement.
Okay, I'm not quite sure that that's what I had originally understood by the risk spotlight, or the purpose of the risk spotlight. So I think that's again, that might be my misunderstanding. Perhaps I need to reread some of the minutes.
No, you're correct. The purpose of the risk spotlight is to give a detailed focus on particular risks on the corporate risk register. But what we're planning to do is to expand the officers who are experts in those areas to come and present those risks to you. So you will get a different perspective from them, because they'll have more detailed information than I or Andrew or the Chief Executive can provide you, because they'll be subject matter experts in those areas.
Okay, all right, thank you. I think Stephen.
Thank you, Chair. If I can refer you to the action plan on page 304, it says individual audit committee members to participate in the self-assessment process. As an individual audit committee member, I'm just wondering, is this that one of us didn't participate? Have we all failed in some way? I'm just trying to understand, sort of, do I need to improve in some way? And this is a subtle hint, and you haven't quite spelled it out to me.
No, it's not. It's about working out how best to engage you in this assessment process, rather than this formal committee meeting process. So you're involved in the assessment because you're challenging it and doing it now, but I think there's an opportunity to have a more reflective and in-depth process than just this committee discussion. And that's what I'll be trying to do next year, and work out the best way of engaging with you to do that.
Okay, thank you. So is that linked into what you were just suggesting, Rachel, in terms of we have a wider review of what we do? Is that part of this, do you think? It's
linked, yeah, but I think what Paul will be able to provide is something a lot more structured and probably a lot better than the discussion that I will chair shortly. But that sounds really positive. And I think linked to that, and I know I've said this before, but you know, to try and get feedback from others is hard, but we need to keep trying to do that as well in order to try and keep improving. Stephen, did you have any other points, or no? Okay, any other comments on the self-assessment as it stands? Okay, and then as a wider discussion then, are there any other thoughts on the committee? This is likely to be the last committee of the year. Any other reflections on how we could improve things? Any thoughts? Yeah, Christy?
You know, this is my first year, so I don't know whether there is a sort of opportunity for individuals to get feedback on how they are participating and whether they're sort of meeting expectations or whatever, coming from an environment where you're always having appraisals. And also, I think, sort of involving the committee in discussions about what would be helpful in terms of development or training. I mean, certainly, when we got the accounts, I watched the video training that you did last year, and it was so helpful. So, you know, sort of, it may well be that different members would have different requirements.
Yeah, no, that's a really good point. And I think towards the start of the year, we try and do sort of skills assessment of the committee. And in theory, that should then lead, if there are gaps, that should lead to the training. So that's a really good point, because we're quite a varied group. Any other thoughts on how the committee runs or the effectiveness overall? No? Okay. We'll leave that one there. Thank you very much, Paul, for that. So then the last substantive item is the Audit Committee annual report. I don't know, is Andrew, you're just going to briefly introduce this?
Very briefly, Chair. So the recommendation is to ask the Audit Committee to agree the annual report for 25-26, and that's for presentation by the Chair and recommendation to the Council at its March meeting. The report itself, I think, is pretty factual in terms of what the committee's remit is and what it's covered through the year and the membership, etc. The one thing just to flag, it is a draft report at the present, and the key thing we'll need to update in this is the position that we get to with the statement of accounts for 24-25. So we'll need to add that in before it's finalised for Council. Thank you, Chair.
Any comments on the annual report? Are we happy that that's a good reflection of the activity of the year? Yes, Mike.
The only point, and probably it's just my reading, on the very last page, 322, there's a paragraph under internal audit, 1, 2, 3, fourth down, and it talks about during the course of the 25-26 year, and then quotes building control. And I'm not sure how relevant. I didn't really understand the context while it was in there, but maybe it's my lack of understanding.
So the building control one is there because it was a higher risk report, wasn't it? So that sort of kicks in a different process in that I get sent the report and it's sort of highlighted. That's the only reason that one's there.
That's the reason it's there, yes. Only category 3 or 4 audits would fall into this.
Perhaps we should say that. It seems a bit of a random
I see what you mean.
paragraph otherwise.
Yeah, so we just check the wording on that one, Andrew, and just make sure it's really clear. That would be good. Yeah, no, thank you.
Because actually, if it is the only high risk audit we identified, then that's good. Yeah. And we should say that the only high risk is this, and this is what we're doing about it.
Mm-hmm. Okay, thank you.
Thank you.
Yeah. Any other points on the report? Are you happy with that? Yeah, Stephen, please.
Thank you. It's not directly a comment on the report, it's just that in recognition that this is probably our last meeting of the year. I think we've all had a really good time serving on this committee again this year. I think it's been very constructive. I think we've all worked really well together. And I just wanted to thank you as chair. I think you've done an exceptional job once again in sort of guiding us through, but also allowing the conversation to flow and the challenges to be there. So thank you very much for your service as chair.
That's very kind. Thank you, Stephen. Okay, so I think I will take a vote on this because we do need to formally agree it. So can I just see a show of hands that we're all happy with that as a true reflection with that one slight change? Yep. Anyone against or abstentions? No, that's carried. Okay. Good. We don't have a forward programme on here. Is that because it's not till next year? Yes. Okay.
Sorry, do we know any of the dates? It helps some of our diaries.
Yes, I can send them. I'll send you the meeting request.
Thank you.
Okay, so we're nearly at the end of the meeting, but as I say, as it is the last meeting, huge thanks to all the members for all your contributions, particularly thanks to our 2 independent members. You're extremely valuable, and we all are so grateful for your service to this committee. And also big thanks to the officers, really good support for the committee You keep it all running really well for us, so thank you ever so much. Right, we'll close the meeting there. Thank you very much.